Hey everybody, Brian here from quantlabs.net. Okay, so today in this video I'm going to show you a video called Technicals. Now this is all my, originally I wasn't going to be doing this, but when I saw this script I thought why not add this to my automated trading system for just one extra metric to generate signals for buy and sell signals and market entry, market exit signals. And I just want to show you the basic script first. So I've made a few additions to this. You can get this script from here in this matplotlib demo here. It's quite good. Originally what started this, if you've seen my positions script, this one I just posted yesterday, I spent so much time on it and it still doesn't work properly, but I did talk about in that video the trend line for trying to generate a general trend line. Now I'm not a believer in needing to re-engineer stuff, so why not just use what's already out there. So in that script here are the attempt to plot a trend line. I'm going to bend in that just because of this script. So let me just show you how it works. It's freely available on this URL. So what I've done here, you just put in your ticker. The only addition I've put in here outside of what it will do is it will also save the figure as well, or the plot. So let's run this thing. So right now it's doing SPY. And it goes all the way back, I think, to its inception. So this is what it generates here is the technical SPY PDF. And the nice thing about this is that you have, obviously, like I said, the historical all the way back to its inception. A few things that we could talk about is the RSI, the moving average, as well as the MACD. Now, for the RSI, I'll show you Apple as well. You can see here it's in mid-range, which is normal. The moving average seems to be somewhat normal. Now, because I have the source code, I can just go back a certain period of time. Maybe I might throttle it back to a year only. And then we also have the MACD as well. What I like about this particular chart is the volume. Let me just run the Apple one, because it's a good classic example using these type of charts. Now I'm going to talk about general technical analysis in a bit, but let me just show you what I want to show. Now here is the Apple. I'm not going to do a walkthrough of it. It's a pretty straightforward script, but I will show you the data it generates, and that's probably more important than anything else. Okay, so I'm running it. Okay, so let me show you the Apple here. Okay, I did mention about volume. This is where it gets really critical here. From this point on, you see there's no volume. I mean, quite literally, it's just dropped off. Nobody's interested in Apple. But when you look at the other chart of the SPY, it still maintains its volume, which is one good way of measuring how the market perceives, let's say in Apple's case, that the market has lost interest in Apple, despite that the stock has continuously gone up, but has started to descend, I believe around since July. But I'll show that in more detail in a better a chart that doesn't go as far back. I'll just do, let's say, the year. Now the other thing is with the RSI, you can see here it's important to highlight that at some point that Apple did breach that lower RSI, and it did bounce. So there is some truth to this. In terms of the MACD, it's way off of its mean. The moving average, again, just a trend. These are various, obviously, trends that you can use for your market entries and exits. So, with that in mind, let me show you the data it generates. Now, this is where it's going to be kind of critical because, as I was saying about technical analysis and the importance of it, technical analysis is a lot of people just use it exclusively to trade. I think that's a big mistake because if you're going to base your data off of past historical pricing patterns exclusively, you're going to fail. I've shown in past videos that how you can use statistics. Just put up a video on how you can just alone use a stop loss and even a soft target as part of your metrics that you can use to pinpoint market direction. Not only that, but market time your market entry as well as your market exit in an optimal way. Now, because of that, there's a lot of power to this, and it doesn't stop with just these simple metrics as well. We have beta, we have other, I've shown ATR and other indicators, but it doesn't stop there. You can use things like, doesn't really, can't really translate it into asset classes outside of equity, but if there are options that you could use for stock, you could do that. And the option chain data and the option open interest can show a lot of power in that. And there's a lot of reports that people don't seem to really use as commitment of trade. So combined, there's a lot of things that you can use. So you don't have to use just technicals alone. I get it if you're a human trader and that's all you have because that's all you can process. But again, I keep repeating it. This is the importance of automated trading. This is the importance of algorithmic trading because you can use your Python scripts or whatever your programming language is that you decide to use, and it just reveals so much power, and that you can build trading logic in those programs, in those scripts, to be able to get a better handle on your market decisions, and not just use them for signal generation and the combination of all these metrics, but also you can automate the trade and the execution as well. That is the beauty of algorithmic trading. So if you are just a human trader, if you are just using technicals, like in this particular script, you'll get creamed. And the markets are now moving so fast, and that the markets are pretty well connected now between 4 p.m. when the markets close in New York. Our markets open up around 7, 8 o'clock in Asia. And then that translates, if there's momentum going through the markets where it does flow from one market region to the next, and then once Asia is ready to shut down, guess who's opening? Europe, London, and it can continue that volume, and then again, it translates back into when New York opens again. I can guarantee you there are patterns that there have been measured countless times that people don't talk about, is the activity in the Forex market between, let's say, 4 and 5 a.m. New York time, which is pretty well when London is starting to really pick up its activity. And then as New York opens up, there's a lot more activity. So a lot of those opportunities are at the times in London that we, let's say in the East Coast of North America, will not be able to take advantage of, because those opportunities in Forex exist in those markets at that time when we are not actively trading. But guess what? As a system, algorithmically and programmatically, the system can still run while you sleep. May not be wise, but if you got a system that has got killer analytics, and this technical script is just one of those scripts that you can use for analytics, among others that I'm showing, you can have a pretty good system that will measure risk, measure your portfolio, your weight allocation when it does trading. But there's a whole slew of things that you can do. But again, I've just meandered off the general topic of what I want to talk about in technicals. There's just one metric that you can use, okay? So, again, let me show you the data that this puppy generates. Now, again, as you can see, let me just bring that chart back up. What we have here is we have RSI, we have moving averages of 2 different periods. We also have the MACD as well. So we have 3 different types of metrics that we can use on top of volume, which I've already addressed. So let's address that. So because of that data, we can obviously put it into our database like Mongo and track it, and then use those combinations of this data and when it shows as market entry and exit for trading decisions. So let me just show you what we have here. So this is where the script starts around here. It goes out and does its Yahoo capture from Yahoo Finance. So essentially we have here the RSI, okay? So there's our data. Now, as I said, we have our RSI of 2543, okay? So that means that our start time period is whatever the start time period has been assigned to this script. I'm not sure where that code is, but it starts today, and I guess it started all the way back to 2006. Okay, so if I put, let's say, just the start of 2000, and today's date is February 10th. So if I put in 15, I think it's, let's just say 2. Let me just make sure that's a trading, that's a work day. Okay, so we're gonna go back. So let me just see here. Oh, this is set in my time. Okay, that doesn't matter. Let's just assume it is. So we're now going to rerun this script starting from 2015, February 2nd. So let me just run this. Get rid of that and let it run. Okay, so if I look at the technicals for Apple, you can see better movement. Actually, these look like candlesticks, which is great. And you can see the volume. This is much better. Okay. Now, with that in mind, we can get a better handle on our moving average, our RSI signal here. And again, if you know me, you know I've been struggling with these dates on the on my x-axis of my own charts, but here they are, done by professionals, of course. And you can see that much better. But let's just even go further. So we'll do it since the start of this year, and since the start of 2016 has been pretty brutal. Out of bounds. Okay, let me just go back to 15. I'll put 9. Let's just say, so that will be 6 months for September. Okay, go further back. So let me just do June. Guess I need to go back at least period of 200. Okay, I guess we'll just leave it. I'll try April. Now, I haven't properly analyzed the script to see what the problem is, but yeah, so no big difference in what I've already shown. Okay, so I was going to show you the data. So I've already shown you the RSI. So where is our RSI data? So I've shown you this RSI data. And again, because you have this type of data, you can develop your own logic for signal generation. So you can see here the timing periods do change. And you could, let's say, get a moving average of 20 days, 200 days. Also, there's a volume somewhere in there, which I find is pretty critical. So where's our volume? Okay. Vmax. So, well, let's do the MACD, because these are, I can tell, for those that are new, I can tell that these are the lines being drawn. So we have MACD, we have also our exponential moving average of period of 9 days. So you got that, and then somewhere in there you'll have the volume. Guess it's right here at the volume. But you can see this is pretty powerful because all this data is really important for signal generation. Stuff it in a database in my MongoDB, very powerful among, as I keep saying, stats, beta, ATR, all that fun stuff. And now we've got this capability to be able to build out even more sophisticated trading systems for better trading, buying and selling automatically. So I'll show some other tricks and tips and some other things I'm thinking of doing. But this is the first phase of the technical analysis script, but I'll probably modify this on top of show you how I'm putting that into my database as well as how I'm using it. Plus I want to also add, you see how I've changed the periods of the charting up here of changing the date periods wherever it was on April. Where was I? Yeah, this period right here. So I can change my start date. What I will be able to do is to be able to probably put together a more interactive front end, which would be helpful, and do that through designing that in conjunction with my Qt designer. So those are sort of things that I also like to address. Okay, so hopefully I'll help you out. I'll show some more stuff with this script for database, as well as probably for more signal generation and eventually market entry and exit. Hopefully I'll help you out. Talk to you later.